Hey guys, Shantae here with SEC Tax Solutions. How are you doing? Hopefully this video finds you well. Happy New Year's. I hope your New Year's going well thus far. I know this video is well overdue. Please forgive me. I had a lot of projects going on at once, but better late than never, right? I really miss sitting down with you guys, sitting down and talking with you guys, but I decided to do something different this year. I decided to record the tax update video and put it on our new YouTube channel. You guys asked and we complied. We have set up an official YouTube channel for SEC Tax Solutions, and I will make it a point to be consistent with the videos. I have a lot of information to share, so I would like for all of you guys to, first thing first, subscribe to the channel. Let's grow this channel. I have a lot of information to share. This video today will focus on the 2022 tax updates. Now, I am not going to hit on every single new update. I'm just going to talk about the updates that I felt were the most important. So if you are already part of the SEC Tax Solution family, welcome back. If you are new to the SEC Tax Solution family, welcome. Hit that subscribe button. Make sure to leave a comment. Let me know what you think about this video. Give me some feedback. I'm open to constructive criticism, and also let me know what videos you would like to see in the future. I have a long list of videos that I'm going to be making and uploading to the channel, but today, for today's video, is going to focus specifically on the 2022 tax update. And again, I know we're already in, today is what, February 5th. So I know we're already into the tax season. So again, the videos is it's a little late, better late than never, because there's still some good information that I would like to share with you guys. And again, I will try to make this as brief as possible. And again, if you guys see me looking down, it's because one, my monitor is right here, so I'm going to be checking my monitor to make sure I'm still in focus, and two, I have my iPad right here just to make sure. I just want to check my notes just to make sure I stay on point, because sometimes I can get a little long-winded. So I just want to make sure that I'm staying on point. So if you see that, you know, my eyes are going here, I'm looking at the monitor, and then down here I'm looking at my iPad. So that's why my eyes are going in different direction. But again, I have lots of information to share today. I will try to keep this video brief and to the point. So if you are interested in what I have to share, continue watching. Okay, first thing first, again, like I said, you know, we're already into the tax season. Tax season is just starting. Most people are still waiting for their tax documents. I know most of my clients are still waiting for their tax documents, their 1099s, their investment documents. So a lot of people will still find this video very useful. But before I get into the meat and potatoes of the video, I want to talk about a few housekeeping items. So first thing first, you guys are already part of the SHC Tax Solution family, then you're already familiar with the portal. We are about 95% paperless. Most of you guys are already using the portal, have already been using the portal. There's a few of you guys that don't use the portal yet. I'm hoping to change that with this tax season. I really would like to be 100% paperless. We are a virtual office now, obviously, so I would like to be 100% paperless, and I would like to encourage everyone to use the portal. Very easy, it's very secure, and you guys will be happy to know that we now have an app. We have a portal app. So if you choose not to use your iPad or your computer to upload your documents to the portal, you can now use your cell phone. And it's as easy as downloading, and I will include a link to the portal, and I will just run through a quick example of how you can use your phone to upload the documents using your phone. Just download the app on your phone, whether you're using an Android or an iPhone. Download the app. Once you download the app, log into your account if you already have one. If not, obviously contact me. I will set a portal up for you. You would use the link that I emailed to you to create a password to your portal. Then once your portal is set up, you can use your phone to take a picture of your document and then upload your documents to the portal that way. Really easy and simple, and again, it's completely secure. So that's that regarding the portal, and I know I mention that every tax season, but I want to make sure everyone eventually is using the portal, because again, we're pushing for a 100% paperless office, and I'm hoping to do that with this tax season. Next thing is itemizing your deductions. Most of you guys already know this, but I did have a couple of questions about this last tax season. If you are itemizing your deductions, you should absolutely be using the tax organizer, no exceptions at all. Do not upload a bunch of receipts to the portal. You keep your receipts. You use the tax organizer to itemize all of your deductions. That's how that works. We've gotten quite a few questions about copies of the tax returns. So once your tax return is complete, a copy of your tax return is uploaded to the portal. You guys should be downloading a copy of your tax return once it's provided to you, because going forward after the extension season, which is in October, usually October 15th, as long as it doesn't fall on a weekend or a holiday, the portal is now set to automatically erase. There won't be any reminders. It will automatically, the portal is used for you guys to submit documents for us to prepare your return. It should not be used to store your document. The changes, what has changed, what's new for tax year 2022. So we're in year 2023 for tax season 2022. What's new, what's changed? So let's start with some basics. The standard deduction has changed. The standard deduction, of course, has changed every single year for the past several years. So that's no different than this tax. So let's take a look at that. So for single taxpayers, the base amounts, I should say, the base standard deduction is now $12,950. That is a $400 increase from the previous year. Now, if you are considered blind, or if you are over the age 65, you can add an additional $1,750 to that $12,950. If you're married, filing joint with your spouse, the base amount is $25,900. That is an $800 increase from the previous year. Okay, and again, if you are blind or over the age of 65, you get an additional $1,400. If you're married, filing single, you're basically treated like a single taxpayer. Okay, the standard deduction rate is the same as a single taxpayer, $12,950. Okay, the additional amount is a little lower, it's $1,450. So if you're married, filing single, and you're either blind or over the age of 65, you get an additional $1,450. Head of household, the standard deduction amount is $19,450. That is a $600 increase from the previous year. If you are blind or over the age of 65, the additional amount is $1,450. Okay. Qualifying surviving spouse. If you had a spouse that has passed during the tax season and you have qualifying dependent, your standard deduction is $25,900. That is an $800 increase. So it's just the same as a married filing joint deduction. And again, the additional amount again is the same as a married filing joint, $1,450. Question that I get often is if a taxpayer is required to file a return just based on certain circumstances. So here's a brief overview of whether or not a taxpayer is required to file a tax return. Single, under the age of 65, if your gross income was at least $12,950, so at least. So you need to be over that amount, $12,950. You are required to file a tax return. Okay, if you're single and you're 65 or older and your gross income was at least $14,750, you will be required to file a tax return. Married filing joint, if you are under 65, both spouses under 65, and your gross income was at least $25,900. Again, remember that is the standard deduction amount. If your gross income was at least that amount, $25,900, you will be required to file a tax return. Married filing joint, one spouse is 65 or older and gross income was at least $27,300, you will be required to file a tax return. Married filing joint and both spouses are 65 and older and your gross income was at least $28,700, you will be required to file a tax return. If you are married filing separately from your spouse, you have that right to do that. If you're married and you would choose to file separately from your spouse at any age, it doesn't matter what your age is, if your gross income is at least $5, you are required to file a tax return. Head of household, if you are under 65 and your gross income was at least $19,400, you are required to file a tax return. Head of household and you are 65 or older and your gross income is $21,150, you're required to file a tax return. If you are a qualifying surviving spouse, again, if you had a spouse that passed during the tax year and you have a qualifying dependent, and you're under 65, your gross income is at least $25,900, you will be required to file a tax return. If you're a qualifying surviving spouse and you are 65 or older, and your gross income is at least or was at least $27,300, then you would be required to file a tax return. A lot of taxpayers will be seeing smaller refunds, and the reason for that is a lot of the provisions that were given during COVID have expired or will be expiring. Okay, so we'll take a closer look at those in just a moment, but just keep that in mind. If you've already filed your tax return and you're someone that you typically get a refund back, you notice that your refund is smaller, that's why. But if you haven't filed yet and you are expecting a refund, just anticipate that your refund will be smaller. So let's just dive into that and take a first look. Child tax credit. During COVID year, specifically last year, the child tax credit was increased, which obviously increased taxpayers' refund. So 17-year-olds will no longer be eligible as qualifying children. That was a provision that was allowed last year or during the COVID period. So I'll reference last year. So that is expiring. That will no longer be allowed for this tax season. And the child tax credit last year was fully refundable. This year, it will no longer be fully refundable. The max refundable portion of the child tax credit is $1,500. Okay? Earned income threshold will apply. Okay, there was an exception last year, again, due to the COVID provision that has expired, that's gone away, that's no longer. Earned income threshold will apply. Credit amount back to $2,000. Okay, last year the amount was $3,000 per child. That has gone away. That provision has expired. That was pretty generous, especially if you have like several children. You get $3,000 per child. But the credit amount is back up to $2,000. And of course, the advanced child tax credit, of course, that has expired and went away too. Like last year, people were getting their advanced child tax credit in advance, or they were getting it in payment. That has expired. That's no longer. The next provision that has changed, and a lot of things with this provision that has expired would be the Child Independent Care Credit. So the expense limitation for one child is back to $3,000, or at $3,000 for this tax period. Last year it was $8,000. So the limitation, the expense limitation for 2 or more children is $6,000, up to $6,000. Last year it was $16,000. The Child Independent Care, it's not refundable. Last year it was fully refundable, which is why so many people were getting such huge refunds. There is a applicable percentage that apply, which was always the case until the COVID provision came into effect, but the applicable percentage is 35%. Last year it was 50%. And of course there is an adjusted gross income phase out, so income limitation does apply. The income limitation last year was much higher, which allowed high wage earners, that's what I was trying to say, high wage earners to qualify for the Child Independent Care Credit, which they would normally not qualify for it in previous years. That also has reverted back to a reduced amount. And employer benefits, excludable employer benefits are at $5,000. Last year it was at $10,500. So several things have changed with the Child Independent Care Credit. Again, you're not going to get the huge amount for each child. It is not fully refundable like it was last year, and there is a percentage, applicable percentage that would apply, and there is an income phase out also, so not as many people will apply for it this year. And I guarantee you that's going to be a very common question. I'm sure I'm going to even get it. Oh, my refund last year, because people are not taking into consideration that all of those changes last year were temporary and they were not permanent changes. But there's going to be a lot of questions. Why is my refund so low? Why did my refund change? This is why. Those provisions are expiring or have expired. And the next one, the most popular one, the big dog, the Earned Income Tax Credit. Everyone loves this credit because it's the most valuable of the refundable credits. So this credit is, I wouldn't say drastic change, but yeah, it's basically going back to what it was before the COVID provision. So the one of the main changes. So the minimum age, you guys remember before the COVID provision went into effect, the minimum age for a taxpayer with no qualifying children was 25. Okay. Last year, that was reduced to the age 19. So that allowed more younger people that are on their own to qualify for Earned Income Tax Credit. So that expired. So now for this tax season, we are back at age 25. So if you are a taxpayer and you fall within that earned income limit and you have no qualifying children, you have to be 25 in order for that to kick in. Okay. And also there is a max age for the Earned Income Tax Credit. Okay. So that max age is back to age 65. Last year, there was no max age. Okay, so now there's a minimum age and there's a max age. Okay, the max credit is, and actually I find this interesting because the max credit for this tax season has gone up. The max credit is almost $7,000, $6,935 to be exact. Last year, the maximum credit, Earned Income Tax Credit, was $6,728. Okay, so the credit has gone up a little bit. There is a limitation on investment income you can have to claim the credit. So if your income, your investment income is over $10,300 for this tax year, you will not be eligible to claim the Earned Income Tax Credit. Last year, the investment income limit was $10,000. So that's gone up a little bit. One thing that I found was very beneficial to a lot of taxpayers, which helped a lot of taxpayers and allowed them to qualify for a bigger credit is they were able to claim their prior year earned income. Okay, so for instance, in 2021, when claiming the earned income tax credit, if their 2020 income was lower or qualify them for the earned income tax credit, they were able to claim that instead in order to qualify. That makes sense. Okay, so the prior year earned income for this tax season is no longer allowed. So that has gone away as well. So those are the changes for the earned income tax credit, and that is partly why you're going to see. And again, as far as the dollar amount, it has gone up for this year. I do want to touch on some of the changes with the energy credits because I do get those questions a lot. You know, a lot of people are going solar, putting solar panels on their home. I actually added solar panels on my home. That's the decision I've made. But there's a few things that you want to keep into consideration. Okay, so the non-business energy property credit, which is now called the energy efficient home improvement credit, has been extended to property placed in service through December 31st, 2022. So beginning on December 1st of this year, 2023, the amount of the credit is now 30% of the amount paid for qualified expenditures. The residential energy efficient property credit, now called residential clean energy credit, has a credit rate for property placed in service between 2022 and 2023 is 30%. Okay, and it is 30% of the cost of the energy efficient property. 30% credit for qualified property purchased by the taxpayer for your resident. Okay, that has been extended, and that's going to be around for a long time. That's been extended through 2034. And this applies for property placed in service after December 31st, 2021 and before January 1st, 2033, excuse me. And another credit that's becoming very, very popular, you're seeing a lot of Teslas, a lot of solar vehicles, is the new clean vehicle credit. You can qualify up to $7,500 if you buy a fuel cell electric vehicle or a plug-in EV. The Inflation Reduction Act of 2022 changed the rules for this credit for vehicles purchased between 2023 and 2032. So it's available for individuals as well as businesses. So there is a income limit for modified adjusted gross income. If you're a married couple filing a joint return and you make over $300,000, you will not be able to claim the credit. If you're head of household and your adjusted gross income exceeds $225,000, you will not be able to claim the credit. For all other taxpayers, if your adjusted gross income exceeds $150,000, you will not be able to claim the credit. Here's another very, very, very popular topic, and the IRS is honing in on digital assets, aka cryptocurrencies. I get a lot of questions about cryptocurrencies. So, and it's not always like about the taxation of cryptocurrency. It's always about how to invest in cryptocurrency. And it always makes me wonder if people are just following the trend or if they're interested in cryptocurrency as a long-term investment, because it's a very volatile investment. So I just find it interesting. I mean, I personally don't dabble in it much, but there are some changes. I think with cryptocurrency, it's taking a bit longer for the IRS to wrap their heads around, to figure out, the taxation regarding cryptocurrency. So we all pretty much have a general idea of what it is. But the reason cryptocurrency or Bitcoin, I guess I'll use the term Bitcoin because that's the most popular type of cryptocurrency. Everyone's pretty much familiar with it. It's because it's anonymous. It is almost impossible to hack or duplicate, or self-authenticate. And there's no middleman. There's no bank or financial institution. So it's almost traceless, pretty much, virtually traceless. That's why Bitcoin became so popular. As far as tax filing requirements, keep in mind, guys, cryptocurrency is considered capital assets. It's reportable and it's taxable. Cryptocurrency is or should be reported on 1099-Bs just like any other investments. Okay, that has recently changed the 1099-Bs to reporting crypto sales from a 1099-B to 1099-DA. D like Delta, A like Apple. 1099-DA. And that went into effect this year. And again, it's taking them a little longer, but I trust and believe the IRS, they're cracking down on this because more and more people are investing, and lots of people have made a ton of money on it. And obviously they had a lot of people have not reported the gain from the sale of cryptocurrency. So, you know, the IRS, you know, it's just taking them a little longer to wrap their head, but once they do, it's coming. It's coming. Sales of cryptocurrency, just like any other capital assets or investment, should be reported on 8949. And let me just say this: if you own cryptocurrency, buy and trade, sell cryptocurrency, even if you do not receive a tax form, a 1099-DA or an 8949, it is still your responsibility to keep track of the information and report it on your tax return. Make sure that you're keeping track of what you're paying for the asset and what you're selling it for. So if you don't get a tax form for whatever reason, you can properly report that on your tax return and avoid a very costly audit. Gifting crypto to friends and family. Lots of people are gifting Bitcoin or cryptocurrency to their friends and family. And keep in mind, when you receive cryptocurrency as a gift, it does not become taxable to you. You do not experience a taxable event until you actually sell the asset for a gain. It becomes reportable at that time. The IRS, now if you notice, or you will notice, and I will put a screenshot of the new 2022 1040 on the screen here, but the 1040, the IRS has added a section for digital assets. Last year there was just a question on the tax return if you have purchased or sold cryptocurrency. Now on the 1040 there's actually a section right at the top of the form where it asks you, at any time during 2022, did you receive as a reward, award, or payment for property or service, sell, exchange, gift, or otherwise dispose of a digital assets? And you have to answer yes or no. That is right on the return. Okay, so this is the IRS's way of holding the taxpayer accountable. You will be required to answer that question whether or not you own cryptocurrency or if you've traded cryptocurrency during the year. Another change that has gone into effect applies to small businesses, specifically partnerships and S corporations, and they are required to file schedules K2 and K3 for tax year 2022. Now, in order to be exempt from filing the K2 and K3, the entity must not have any foreign activity or have limited foreign activity. And this one only applies to partnerships, but all partners must be U.S. citizens or resident aliens. Notify all partners and shareholders no later than 2 months before the return due date without extension that partners and shareholders will not receive a K3 unless requested. The partnership or the S corporation must not receive a request for a Schedule K3 from any partner or shareholder on or before 1 month from the return's due date without extension. So the next change also affects small businesses is mileage change. So the dollar amount that you can request per mile has changed. So after June 30th, the amount that you can claim per mile is 62.5 cents. Before July 1st, the amount per mile is 58.5 cents. Now, I cannot stress this enough. If you are claiming business miles, you must be keeping a mileage log. There is no exception to this. If you are ever faced with an audit and your mileage is in question, the auditor is going to ask for a mileage log. And if you show up to an audit without a mileage log, you're automatically going to lose. So you should be keeping a mileage log, whether you keep that, a notepad in your car, you keep the log on your phone, or you use an app such as MileIQ. But you should be keeping a very detailed mileage log. The date you're traveling, the location, the mileage to and from, and the reason for the travel. Those are the main things you should be recording on your mileage log. And again, you need to be consistent. And your mileage, for the year, your mileage log should record the total number of miles you travel for the year, and that should be consistent with what you reported on your tax return. Okay? Do not get caught without a mileage log. Do not get audited without a mileage log. I promise you don't want to. Cent per mile is very generous. Okay, and you have every right as a business owner to deduct the miles that you drive specifically for business. But if you're not keeping a mileage log, or you cannot substantiate your miles, then you're going to be in a lot of trouble if you're ever audited. So just make it a good habit, good practice to keep a mileage log. This next change, this change went into effect in 2020 for 2019 returns, amended returns. So back in the day, when you needed to amend a return, you can only mail in the amendment, and it took several weeks, even months, for the amendment to get processed. Well, that has changed. Now, amended returns can be e-filed. And again, the e-file of amended returns, I think that took place summer of 2020, if I'm not mistaken. Okay, here are some key points to take note. The original return must have been e-filed. So in order for you to e-file an amendment, you must have e-filed the original return. Some key points to keep in mind regarding e-filing amended returns. The original return must have been e-filed. Okay, so in order for you to e-file the amendment, you have to have e-filed the original return. Okay, the refund cannot be directly deposited previously. Okay, when you amend and return, you could not have the refund. If there's a refund due, you couldn't have that refund directly deposited. That a check was mailed to you. And the amendment could not be e-filed more than 3 times. Previously, when you amended a return, the filing status or social security number could not be changed. So for instance, if you on the original return you filed, let's just say, single, okay, and then you wanted to amend the return, and then you wanted to go from single to married filing joint, that was not allowed. Now, beginning January, this tax season, 2022, beginning January 22nd for 2021 returns, the amended returns can be e-filed regardless of the original returns filing method. So even if you mailed in your original return, as long as the original return was processed and received by the IRS, you can e-file an amendment if you needed to. The filing status on the amendment can be changed, so you can go from single to married filing joint and vice versa. Or that wasn't allowed, now it is, starting last tax season. The primary or secondary social security number on the e-filed amendment can be changed. So if you made a mistake, fat fingered, and entered either your or your spouse's social security number, or either one of the dependent social security number. No, actually I think that applies to just the primary or secondary social security number. If you enter those social security numbers incorrectly, you can amend, and those can now be changed. Previously, that wasn't allowed. And direct deposit is expected to be available March of 2023. So when you file an amendment, you starting this year, March 2023, you should be able to elect direct deposit. Whew, hallelujah. That has, you know, that is a big change. It took a long time, and I do not know what the delay was in allowing taxpayers to e-file amended returns. I don't know, but there you have it. That's all I have for this video, guys. I hope you found this information helpful. Again, be sure to like the video. Please like the video. Help this channel grow. I am willing to do the work. I have lots of information to share. I have a long list of topics that I'm going to make videos for, but I would like for you guys to share the video. Share on your social media platform. Share with anyone that you think this information will be useful, and comment below. Let me know what video you would like me to make, what questions you have. I will definitely answer your questions. I will respond to the chats. You know, let's get this thing popping. I'm excited. I'm glad I did this. It took a while to get started, but we're here, and you guys asked for it. So I expect you guys to fully support this channel. It's for you. I did it for you. It's all for you. So SAC Tax Solution family members, definitely I expect you guys, even if you can't watch the video right away, just save it to watch later, but be sure to subscribe and like and share, and then, you know, just come back and watch it later. I'm here for you. That's it, guys. You guys have a good one. Until next time.